You keep losing trade after trade, and you don't know what's going on. You're thinking, why is my win rate so low? Well, in this video, I'm going to explain to you how to higher your win rate significantly, because you are more than likely just guessing and gambling on the market, but you need to rather react. That's why you analyze the market. If you were to just play a guessing game, you would flip a coin and then just buy or sell. You analyze for a reason. You're analyzing the market to see what's happening, and you're trying to go with the market in the direction that it wants to go. The same way you need to have your entry the same. Why are you analyzing the whole market, trying to find the direction, and then just randomly selling or buying at a random point with no analysis? So what do I mean by that? Let's open the 15 or even the 5 minute chart. The way you improve your win rate, okay? Rather than seeing the market here in this, let's say, situation right here, and you say, okay, the market is going down. We've just broken structure here, okay? If you're to guess and you'd say, oh yeah, we broke structure, we're gonna go target some liquidity down here on the left, right? You say to yourself, okay, look, I have a fair value gap right here. So you enter your trade right here. Let's draw it out. You draw your trade out here, and you target liquidity down here. Okay, you've just lost. Then you say, okay, no, 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 I can't lose. We're going down. Okay, you enter on this fair value gap now. So you delete this one. You enter on this fair value gap now. Stop loss. I don't even care. Here, target down. You've just lost again. Then you say, okay, finally, I've got a nice POI here. I'm going to enter as soon as it touches that. So then you put your entry. It would be like this here. Stop loss above, and then you go down again. So you just lost 3 trades in a row, and you're thinking, what is going on? Why am I losing? Blah, 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 blah. It's because you waited for no confirmation. So let's just put it this way. You've had 3 different trades that you could have entered, or you would have entered, and you would have had 3 losses, right? So using a confirmation will lower our 3 losses. So let's mark out the 3 areas we would have lost in. Even a fourth one, if you use equilibrium, let's say, wrong tool, let's say you use equilibrium as well, and you enter at the 50% stop loss all the way above here. 4 losses. So let's put it here. Let's say we were going to take 4 losses, right? And let's mark out the area. We have the first area, which would be here. That's our first loss. Second loss would be as soon as we tap this fair value gap. Third will be at the 50% of the drop, and fourth would be here. Who knows? Maybe you even took a fifth, 50% of this fair value gap. But let's put it down to 4. If you were to wait for a confirmation before entering, you would have watched this fair value gap on the 5 minute and seen we've broken through that. I'm not going to enter. So your 4 loss, we've just missed out on 1 loss. So we have only 3 possible. I can't draw good with this tool on here. We have a possible of 3 losses. Okay, now so not 4, because we've took away 1 loss. Then we check this fair value gap here. Okay, we want some kind of reaction in the fair value gap. What's a reaction? When we see a wick or something. So we went up, we filled in this fair value gap. Okay, we didn't close. So where's the high of the fair value gap? It's this line here. We didn't close above it. We closed inside the fair value gap, and then we wicked and closed under the 50%. So let's say this is where you waited for confirmation. You enter here, stops above your fair value gap, and you target the bottom. You take a loss. Okay, so now you've taken 1 real loss. So out of the 4 losses that you would have taken, you've taken 1 real loss. Okay, just one. And now we see we have the POY here. Do we get a reaction on the POY? No. So that means we've saved our loss in here, 1 loss in here. We've saved our loss in here. And then the fair value gap loss, which was mixed also with 50% of the whole rise, the equilibrium. So we had 2 confluences, equilibrium plus our fair value gap got respected. I guess you could say respected because it started to react. You would have entered and would have taken 1 loss rather than 4. So that's already instantly, I said, dramatically, your win rate has increased from 4 losses in this area here. Let's say that was a whole London session, you're only going to lose one time. So instead of losing 400 or 4%, you're losing 1% or 100. That's how you lower your win rate. You wait for confirmation. In this situation here now, we've broken structure. Okay, let's say you wait again. You wait for some kind of confirmation in structure. You swept this liquidity. I don't know, maybe you would have entered the sell here because we wicked, possibly. On the 15, I think if you were to mark out the 15, yeah, 15, there's liquidity above here. So you wait. You haven't had a sweep of 15-minute liquidity, a high liquidity point. So you wait. You sweep, you close down below. Okay, you wait. Now you have your low in here. You wait for the low to be broken to show that we've shifted, which you learn in my course about this market structure shift, which you probably know if you're watching this video by now, if you're not even in my Discord. You have your market structure shift. So now what do we have? We have our point of interest or order block now because we've swept liquidity on the 15 and we've broken down. This is an order block, not a point of interest. We have our market structure shift and we've got our fair value gap in here. Okay, we draw out 50% as well as one extra confluence. It's gonna be down here. So then at this point, you say and you look and you see a nice tap into the one fair value gap that we have. We don't have two like we have down here because also look, this fair value gap is very low compared to the drop. This fair value gap is better already. So we've got 50, we've got the 50% above it, and we've got the fair value gap. We react of it and we close below good. So then that's a confirmation. We've just reacted from the fair value gap. So then you enter on the reaction, stop loss either above the reaction or above this. Why is this also better than the other one? This candle, even though it reacted, it closed inside the fair value gap. So it's slightly invalidating the fair value gap already by closing inside. Here you see and you have your confirmation. You react to the market. The market tested the fair value gap and really cleanly closed bearish with a pretty big black candle. So, or whatever color you have, big sell candle with only a wick inside the fair value gap. Also, you reacted 50% of the fair value gap. So you've touched the fair value gap deep. So that's again one confluence is we've touched the fair value gap. That's one. Two, we've closed outside of it. Three, we touched 50% of the fair value gap. Four, a big down candle. And five, we've closed and engulfed this candle with a big sell candle. So you've got a lot more confluence. And now you react to the market. You say, I will sell, and you put your stop loss either above the reaction or you say I will put it above the 50 above the fair value gap here, because what you have in here also, you have the 50% of that 5 minute drop for protection, and then you target liquidity points. Let's say the most recent one, look at the or there's your 1 to 3 perfect trade played out. Liquidity sweep, fair value gap, 50% reacted, enter. That's literally from 2 years ago the most standard, and the most, almost 90% of TikTok is filled with this. What strategy do you use? Liquidity sweep, break of structure, fair value gap. It's this right here. I don't use this, but there's the most simple strategy being worked. I don't use this, and I don't like entering of fair value gaps. I think now they don't hold as much power as they did before. But look at this example, it worked. That's why everything works if you wait for confirmation and put your confluences together. Rather than saying, oh, I swept liquidity, I'm going to sell at a run. Oh, I'm going to sell. Look, I'm selling off. Your stop loss is going to have to be like somewhere up here for protection because you're entering at a random place. And look, you're not even hitting a one-to-one with this trade. Because you're entering in a random place and you have to drag the whole thing. If you'd rather wait for confirmation and you have it here, target a liquidity point, or go lower and target liquidity points that are in the market from previous, you could be hitting, look, 1 to 4, 1 to 5, 1 to 6, all because you waited for your confirmation. You waited for your liquidity sweep, you waited for your fair value gap or order block or POI to be formed. You chose your entry. I chose fair value gap for this example, and you had the reaction. Also, you don't want to be flipping from order block POI to fair value gap. If you trade fair value gaps, you have to trade fair value gaps. Like I said, if you trade fair value gaps, you need to find what fair value gaps work better. For example, this fair value gap didn't work. And this is how you analyze. You say, what happened? Okay, I had no liquidity sweep with this wick. You could say this, but we never broke this low down here. Is this a liquidity sweep? No. So there was no liquidity sweep. The fair value gap had no liquidity sweep. This one had one. Okay, that's the one difference. This fair value gap, we close inside of it. Yes. Did we close in this? No. Second difference. Then you say point of interest. I had a very bad doji candle in here. Here I had a good point of interest. Third difference. And then like that, you basically just you just basically check what the differences are, and you see them here. I'm showing it to you live, and that's how you analyze your mistakes first of all, your wins, and then on top of that, you find your entry. And that's how you do it. You have to put your confluences and react to the market. The market reacted to the fair value gap, showed you we're selling. You sell and you put your stop loss in a good spot, and then you let the trade ride. If you lose this, it's better to lose this because you have a reason for your loss. That's a big thing. You need to have a reason. Here you have no reason. You close inside, you're pretty high up, no liquidity sweep. It's like there's kind of no reasons to enter. Here there's a lot more reasons. You have a really nice 15-minute liquidity sweep, very nice point of interest, very nice market structure shift, very nice fair value gap. It's not too massive and it's one fair value gap. Very nice reaction with no close. Very nice sell candle also, and then good liquidity points at the bottom. So there you go. You waited for the reaction, and that's gonna up your win rate a lot more. If you have any questions, comment. I appreciate a like. I appreciate a follow if this helps you. I have a free Discord. You can check the link in the description. And I will see you in the Discord. Maybe you'll join in. You're gonna see some free sauce. Maybe win some free giveaways that I do in there. And I'll see you in the next video. Enjoy.